Next up is, we're going to have Michael Casey, Lou Kerner, and Nick. You haven't heard from Nick. Nick and Craig run a family office called Inverted Ventures. And this is the last panel of the day. We're going to keep it very interesting. Where is Nick? There he is. He's probably the first family office principal that I've met in the recent past that has actually, as their name suggests, looking at investments that are not traditional investments for a family office. We've had some interesting conversations about how they view the world, how they make investments, and what the future looks like. So I'm going to ask Lou and Michael Casey to grill Nick today. As we move from Web 2.0 to Web 3.0, grill him and grill him hard. Tell us why they're special. Because I think he may be, between Nick and Craig, they're running some interesting models, right? Very interesting on how they look at investments. And we want to grill them hard. Nick, you ready? Okay. Michael, Lou, are we ready to grill them? Yes. All right, welcome to the floor, guys. Come on. Nick, you ready?
I'm feeling good. 4 seats good?
Yeah.
Thanks for the intro, Kurt.
No,
so if he's being grilled, is he sitting in the
put him in the middle,
like
separate the chairs because you don't want to get too close to him.
Go for the pincer?
Yeah, the pincer move.
You don't want to get too close to him because he's going to be sweating. Okay. Right. Where's Lou? All right, we're going to start.
All right.
And we're going
now you wish you had that prep beforehand, don't you?
Yeah, no kidding.
Yeah, now you don't know what's coming at you.
Lack of notes, pincer move coming at me. Like, here we go.
Rock and roll. So I'm actually going to just, why don't we go tough here? You probably heard, Jack Dorsey that looked at sort of like Web 3.0, this big pile of hot air. It doesn't have any meaning to it. It's just a buzzword being used by venture capitalists to sort of move money around. What do you say to that?
Oh, I would wholeheartedly disagree that it's just a buzzword, but there is a lot of lack of clarity among multiple investors what Web3 actually means. And I would take 3 distinct features that Web3 has, and that's sovereignty. People now have the ability to custody their own assets. This is mid-chat selfie.
Get the best side.
Disintermediation, that we no longer need intermediaries both to handle our transactions or to actually be actively involved when we need to make decisions of custody. Again, sovereignty, you are able to interact within the web, within Web3, without needing to give away all of your data and not receive anything in return, without being able to have to use, let's say, a bank for finance in order to conduct transactions. And finally, transparency, open source software versus something like in the social media space, Facebook or Twitter, where what is being prioritized to you is unclear rather than being front-facing.
All good points. Before I start, we had a chance to talk on the boat yesterday. How many here went on the boat? Yeah. How many here went to Citra? Oh my God, Citra was awesome. I just want to say, Kareem, thank you so much. This was so great. I was able to bring my 18-year-old son with me, show him these great things. This was world class. So when we were on the boat, we had discussion. Let's see, community is a word that gets used a lot, but I think it actually means something different if you ask people what it means. How do you define community?
Well, again, I'm gonna really thank you for challenging me in our fabulous conversation on the boat. The biggest stumping question that you gave me was to actually define community. And to me, I defined it as a group of people with a common set of values. But in that discussion, you challenged me to understand the values that community have. And I really think that you can articulate it quite well. But the values that are added by the sum of the parts of people coming together rather than all of those parts of the community individually is a higher value. You have a great analogy to explain it.
Yeah, well, I guess I describe it as a community is an ecosystem where when it works, everybody gets more out of it than they give. And that's really magical.
No, it's a good one. I mean, and it is, yeah. It's actually the antidote to the whole zero-sum game way of thinking about the world, right? That wealth is created rather than taken.
Exactly.
And so that is really the fundamentals of why civilization has grown to where it is, because communities have come together. What is it about Web3 technology, though, that and the various components of it that enhances the formation of these communities and these value propositions around that?
Well, this idea of sovereignty of our own assets allows us a lot more decision-making power, whether it's from the statement of, or whether it's from the state of being a participant in these communities or people who are creators of the communities. Well, you can be both of those things, but you have a lot more autonomy with those decisions that you get to make. If people, great example, if people all want to come together and bid on buying the US Constitution, now they can come together in those groups in a way that's a lot more natural, and they can start to craft it in a way where they're bringing all their assets that they want to contribute to this community all to pursue a common goal. That was nowhere near as transparent and simple before the adoption of, call it transparent blockchain technology.
Have you gotten, I didn't ask, have you gotten deeply involved in any communities yet?
I wouldn't say I've actively been involved in any DAOs myself, but I've been following a lot of the movements around various different NFTs, various different communities within cryptocurrency. To answer your question, no.
Okay, then I would have asked you about a specific project, but then do you have any general views on kind of governance of DAOs and where you think we are? And by the way, are we each giving them a separate grade?
I think that's where it's going, yeah. It's like, whatever, that was a good one. That's going to get him, yeah. Governance of DAOs.
I really find that in this evolving landscape of blockchain technology to power, call it multiple different decision-making processes, we're still at the point where we're melding these mainly online communities with decision-making power in the traditional world. Governance behind a company and governance in a decentralized group of individuals that share common values are just linking now as they're almost parallel worlds that both simultaneously exist with small bridges that link the two. Now, how we're able to interact in a way that's more structured, I think that's going to happen naturally over time as people start to really actively want to get involved in these newer, ever-growing, powerful communities compared to being involved in traditional communities where, if you want to see any change, you need to phone your congressperson, or which, the results of that will probably be quite piss poor in comparison. But I actively see that changing, and the newer communities will start to grow in power, and they will start to meld together, and you'll see this very strange world where all of a sudden these online communities do have major decision-making power.
I mean, there's got to be a public education element to this too, right? People have got to start to feel comfortable with these new different forms. They're used to having somebody in charge, a corporate CEO, the C-suite making the decision. It's a hierarchical system. And in addition to that, there's actually, not always the most positive news out there in relation to DAOs. I hated the fact that the DAO of 2016 stole the acronym, right? As if there's only one. And that was a disaster. And it was a disaster precisely because the governance was very badly designed, right? They built a doomsday machine into it without realizing. And then, of course, just last week we had the collapse of UST, which is not exactly a DAO, but it is certainly this idea that these decentralized mechanisms can naturally create some sort of equilibrium and security, and that one kind of fell apart pretty badly as well.
I mean, we have seen some things work. Obviously, sure. Uniswap works. Yeah. Curve works.
Yeah, no, exactly. So the key is going to be finding out what that balance is, right? Where where's all the protection against the, the doomsday moment where the machine turns against itself and eats itself? And there's backs. Yeah, I hate when that happens too.
But I don't think inherently, and
No, go, please.
I don't think inherently that starting these new communities and new systems where we're testing the capabilities of the technology is bad. I mean, when you get enough humans together in groups, there are going to be players that have, call it, malice in their intent. Or they're, from another perspective, whether it's malice or not, good ideas in startups fail. Not every single good idea for a product to develop is successful when it goes to market. And especially looking at the UST Terra Luna disaster, there is an argument to be made of malice, but there's also an argument to be made that they were testing out a new product in an ecosystem
with a lot of victims.
With a lot of victims. But as I was at a conference very recently talking to a lot of institutional investors and really asking questions about blockchain technology and how many of them understood information about cryptocurrency. So one of the first questions a presenter asked, I was in the audience at this point. He asked, how many of you in the audience know about EIP 1559? And 2 people out of 50 put up their hands, and the presenter said, well, I've never seen a better example of information asymmetry.
Right.
That the people who are in the know understand what's going to happen when you see.
Do you want to tell these guys what EIP 1559? Which 1519?
Sure.
Right, yes.
Sure. It's a change to the Ethereum protocol where the gas fees are burnt instead of being allocated to the miners as the blockchain is moving towards proof of stake rather than a proof of work consensus mechanism. What that all means is essentially you're going to see a reduction in the supply of Ethereum over time as more people use the network.
Which should support the price.
Which should support the price.
Yeah. I always like to use the analogy as well. You say to people like, how many of you, have used email and how many use the internet session and say, who knows what TCP/IP is, right? And it's like, that no one's heard of it. And, these
and
things
that's right. And that's actually, part of, and I'm all for education. Obviously, we should educate as many people as we can to bring them on board. But I'm pretty sure we are not going to educate our way to mass adoption. The way we get to mass adoption, we make it so easy they don't need to be educated.
Right. No, absolutely. So, okay, investors hat on then. Where do you and how do you invest in all these different opportunities, be they communities or NFT projects or whatever in the Web3 world?
Well, specifically my company, Inverted Ventures, what we're always looking for is asymmetry in investments. The chance of having a loss is not zero, but let's say when I started looking at investing in crypto in this cycle was immediately after the COVID crash. You had the Bitcoin halving coming up, very bullish event in that it is a halving in the amount of rewards that are paid in new Bitcoin mined, which is disinflationary for the supply. You have a massive crash due to something that has nothing to do with that ecosystem. And during March, you had a massive amount of stimulus entering the market. So yeah, might have been wrong, might have been early, and there was a chance to lose, let's just put a number on it and say 50%. If I was wrong in that investment. But if I was right, it was going to be a massive explosion in market cap as people started to adopt what I truly believe is the best collateral of this future internet age. Now, looking other than that at other projects within the Web3 ecosystem, I think something that's very important is looking at the utility it adds to various different applications, whether it be gaming, whether it be DeFi, decentralized finance, whether it be for NFTs. Does it allow value for people? Is it underpriced compared to the amount of, let's call it, I like looking at price compared to the total value locked in a protocol. So is it underpriced compared to the amount of assets it has under its umbrella? And is it interesting and something that people aren't really looking at? And largely, I think, based on speaking with institutional investors, that's a lot of the crypto market. Even in a position where we do look like there's a lack of liquidity entering cryptocurrency and the broader market as a whole, I still think it's such a nascent space that has the capacity to grow exponentially when compared to other markets to invest in.
Why do you think the price of Bitcoin isn't higher?
At this moment in time, I'm a huge believer that the tightening of monetary conditions globally due to increasing inflation from long period of loose monetary policy,
yeah.
is really affecting the amount of capital that can chase after assets within the crypto ecosystem and the traditional financial market as a whole. I really don't agree with the analysis that people tend to have that Bitcoin is an uncorrelated asset. I don't think it is consistently correlated with the same items. I mean, I remember in 2020, the amount of time people said that Bitcoin was correlated to the dollar. Negative correlation, but still. I remember, now people for the past 6 months have been speaking about how correlated it is to the NASDAQ. But that's true. But it doesn't really get to the point of why people want to own Bitcoin. And at the same time, it is affected by broader market conditions the same way tech stocks are, the same way bonds are, the same way commodities are. People want to buy a good, meaning there's demand, and there's a certain amount of the good. And the mechanism by which they're trading is the liquidity in the market. So why is Bitcoin's price not higher? I think truly because there's not enough capital chasing after it right now, even though in the long run.
It's hard to argue it's that, but why isn't there more capital coming after, right? Because for those of us who've been here a long time, you would think like all these conditions we said, well, when this happens and this happens, that's when Bitcoin's really going to rock. And all those things have happened, and here we are.
No, that's a very good point.
Yeah.
I think the dollar price of Bitcoin and the dollar price of all cryptocurrency is a reflection of the amount of said currency, the dollar, the global reserve currency, flowing into asset markets as a whole. Now, if you measure your returns in other investments within the crypto sector in Bitcoin, you're going to see a very different mathematical equation. Let's just take ETH/BTC, the most common ratio in cryptocurrency. You'll still see that over the past 2 years, your Ethereum investment has appreciated relative to Bitcoin. But in dollars, depending on when you invested, you still might be down. It really depends on what you want to compare to as your denominator.
But if you took that to an extreme, right, you would just say that Bitcoin just is a highly speculative risk asset that is affected by all these capital conditions you're describing. It just happens to have a bigger delta on the up and the downside than everything else, right? But as you also alluded to, obviously people buy Bitcoin for different reasons than that, right? So, are there phases in which that phenomenon becomes more important, and then others where the conversation around, is it a store of value, is it a protection against some other systemic problem, or is it actually investment in this broader digital platform of the future sort of thing? Do those things rise to the fore at different moments in its history, or are we really just beholden to what Jerome Powell is doing?
Well, unfortunately, I do think to a certain extent we are when we're measuring price day to day. But as more people migrate to what I would hope that we agree, seeing as we're all very much active in the industry, is a superior product over time. More people choose to be allocated to an ecosystem where they can indeed custody their own assets without having to rely on another counterparty. And the market cap relative to the traditional financial system grows. I think you'll see a lot of suppression in that volatility. And you'll see a lot of those correlations cease to matter as much as the new digital asset ecosystem grows in market cap.
Yeah. How about we move on? Own any NFTs?
I am terrible at NFT investing.
Yeah.
I've actually only ever lost money investing in NFTs. The first time I saw Unisocks, which was the first time I really got introduced to NFTs, first thing I said was, who's going to pay $2,000 for a pair of socks? And within a few months, you were paying $300K for a pair of socks. So,
well, I wasn't.
I wish I was at that point. That'd be an outstanding ROI. Passed on Bored Apes, passed on CryptoPunks. The best allocations I've got to those types of projects were actually investing in tokens like Decentraland and Chili's token, where I was getting involved in the ecosystem. Without actually purchasing the NFTs. Personally, this is just for me individually. I have a very high liquidity preference. And I find if I'm in an auction where people are having to bid, not getting filled on essentially my sale immediately, I'm less comfortable other than the early stage venture capital market where I can understand, okay, these are the underlying fundamentals of the company. I don't think we've really gotten there in the NFT space at this point. Though I do believe there is a lot of value in that ecosystem. This is just my personal liquidity preference.
And there are, it seems, investors, collectors, and so forth who do have some pretty deliberate strategies around it and have done quite well for themselves, right? So there's almost like a different mindset to how you invest in NFTs. Is that fair to say? Is it the mindset of a fine art collector, or is it a different way of thinking about investing? That's kind of where I'm going.
I would agree to a certain aspect, the way you were describing an NFT investor as a fine art investor, but I also think it's more than that, right? When you buy an artist's work, you do wind up in that community, but there isn't anywhere near as much of an ability for said investor to be active with other participants in that community as there are with NFTs. To pursue as members of almost a voting block for that particular set of values, to pursue, again, other investments. Bored Ape, for example, through the issuance of the Ape token, the digital land sales within that ecosystem, these are all a shared set of values that people all identify with in their investments in these cool-looking monkey pictures, which connecting those two sets of values are very, very strange, because you just don't see that kind of technology backing, let's call it fine art investors who all want to own Monets.
Not yet.
Not yet. And that's where having that digital distributed electronic ability for those participants to invest together, speak together, communicate together, really paves the way. One day people will tokenize traditional art that already exists if they're not doing it already.
As you've gone along your journey, who have you learned from?
Who have I learned from? As somebody who really is fascinated by global macroeconomics, two people that I've spent a lot of time paying attention to over the past 2 years are Raoul Pal and Keith McCulloch, who are two people with two very different sets of macro principles. One very quantitative, the other quantitative to a sense, but still very much based off of these larger trends rather than trying to equate asset prices, individual asset prices into explaining where we are in terms of growth and inflation.
And I know Raoul Pal. Well, I don't know Keith.
Keith McCulloch is the CEO and founder of a company called Hedgeye. They produce a lot of data for all different markets, commodities markets, fixed income.
So a broad macro.
Equities, a broad macro. And I personally like using his quantitative framework to figure out what assets are going to succeed, when, and for total transparency, we have a lot of our assets in cash at the moment, in stablecoin, because we do believe that.
Hopefully the right stablecoin.
Yes. No, UST isn't looking as good as it was a few weeks ago. But very much at the moment, based on the lack of liquidity chasing after assets, stablecoin.
Are you finding those people like that are becoming crypto savvy? Like is Keith McCulloch? Like, I mean, he clearly is a macro guy, TradFi to start with, but is he? Are they starting to take all of that sort of sophisticated analysis and just incorporating a crypto take?
Totally. Yeah. And I would like to say this, as those are two people I've learned a lot from who are putting out public content. This is just me describing where I think there's a difference in the way that they're approaching teaching people. It's more of a trading sense when you're looking at Keith McCulloch's versus it's more of an idea of how, as an investment in cryptocurrency, I've learned from someone like Raoul Pal from Real Vision is more about how that technology is influencing the greater public and how those investments might perform over a longer time frame, rather than from the difference between an investment and a trade, from my perspective.
So, Nick seems to have survived 8 rounds with heavyweights Lou and Michael. You got 2 rounds left, so can we knock him out? 2 questions. Who has them? Here you go.
Inverted Ventures. What is Inverted Ventures? I went to your website. You're a trader. You do cryptocurrencies. You're an angel investor. You're a venture fund. What does Inverted Ventures actually do?
I'm really happy you asked me this question. So Inverted Ventures is a single family office with a focus on finding assets that are going to grow exponentially. We look for asymmetry And we're always looking as a family office to invest both in places where other investors aren't looking as a percentage of the broader market, as well as trying to find companies and tokens and areas we could find value where it's not just an incremental change to their industry where they're offering a slightly better product. We're looking for players that have an idea that is going to flip the industry on its head. So Inverted Ventures is saying, no, we want to find the people that are going to take their industries and turn them upside down.
Have you heard of Ripple?
Okay, we have one more question. It's round nine. This is the last round. Can we knock him out? Can we? Anthony? Anybody? Golden? Anyone? Look, Nick, you survived. You survived. You're the winner.
So much.
Thank you.
That was a lot of fun.
That was fun. Yeah, thanks for doing that.
Thank you so much. Thank you. A round of applause for yourselves. You survived the day. You made it through this day. Thank you, thank you, thank you.